Good Sunday morning, option traders. This is Sam, the Trader Geek, with your July 27th, 2025 option and market review and preview video for the coming week. Hopefully, you're having a great weekend. And we're taking a look at the day, the week, and the month that has and was. Friday was a pretty positive day. Only thing really down much was the VIX, about 2.99, finally closing right below the 15 level. So we're getting down there, not quite to 12, 13, but it's down there. A little bit of Bitcoin losing about 2%, gold about 1%, and microcaps down 0.25%. The rest were up. Mid caps taking the lead on Friday, up 91 basis points, and long bonds actually up about 63 basis points. Mag 7 up 0.5%. If we take a look at the week last week, you can see that the SPY was up 1.5%. Total market index 1.49%. The VTI is something that a lot of people have in their 401ks, in their IRAs. Total market index. It's a good, cheap index fund to put your money in. Covers thousands of stocks, and you can't go wrong as a long-term passive investment. MDY mid caps 1.44, and TLT finally getting a bump, up 1.4%. Down at the bottom, the VIX losing 9%, and the dollar losing about 1%, with Bitcoin losing 0.5% on the week. The quarter is still young, but we are 3 trading weeks into it. And so far, contrary to last week, Bitcoin is up 8.3%, microcaps up about 6%, and Magnificent 7 up 4%. And VIX still at the bottom of the heap. The more the VIX goes down, the more bullish it is for the market, and vice versa. TLT down 2% on what is basically a month to date in July. And we are coming up on the last trading week of July, as the month ends on Thursday and we get a new month on Friday. So aggregate bonds minus 0.75%. And yeah, so kind of a mixed thing. If we look at major markets year to date, gold is still the leader, as is Bitcoin, second place, 24%, 27%. So beating the pants off stocks. Here, the next closest major market is the Q's up just under 11%, and the SPY up 8.71%. So not shabby for the first, call it 6.5 months of the year. Mag 7 up 6%. So definitely not carrying all the weight that they should be or would be expected. VIX down 14%, finally down on the year. And the dollar weakness is, as some people call it, helping the markets, although the correlation is fleeting at best when you take the dollar compared to the stock indices. There's no real correlation, although a lot of people will convince you that there is, and it comes and it goes. So you can't really call it a strong correlation between dollar down and stock market up. IWM finally getting into the positive for the year, as the aggregate bonds as well. So looking good quarter to date. On Friday, looking, except for the energy, metals and mining, and telecommunication, everything was up just a little bit. Actually, communications and real estate were flat, and basically XLB, being materials, was up 1.18%, and transports up 1% on the week. Very interesting to see green all across all of the sectors. And mind you, these are the S&P sectors plus a few extras that I've thrown in. Telecommunications is not really a sector. Neither is transports. But basically, I'm throwing them in just as retail is not a sector. But kind of coming from behind, finally, XLV, the healthcare, showing some strength last year, as were metal and mining, pretty strong. last week. Taking a look at the quarter to date, which is the same as the month to date since we're in July. Look at that. All of them are also green with the communications, where the main components are like Meta and Disney taking the basement, and metals and mining really strong quarter to date, 15.44%, and retail stocks up 6%. No thanks to Target, that's for sure. And XLB materials about up 5%. And here we go. We finally get some positive in the healthcare. Year to date, we still see healthcare that is down about 80 basis points. Consumer discretionary, which comes and goes as Tesla and Amazon come and go, because those are the main components, up about 0.25%. And then XLE finally getting back into the green on a year-to-date basis, 1.68%. But metals and mining, look at that. Whether you're platinum or palladium or gold or silver, doing really good. So those metals are doing good, whether they're industrial or precious. XLI, 18%. I should note that XLI now includes Uber, which has been doing pretty good, and technology up 12.67%. So a lot of double-digit sectors on a year-to-date basis, with materials almost there at the 10% mark. Taking a look at the Mag 7 for last week. No, I guess I got the quarter to date. Where did my, there we go. The weekly. Tesla on earnings dropping about 4%. The rest of the Mag 7 green, with Google taking the lead on their earnings, and then Amazon up 2.35%. So NVIDIA up a mere 6.63%, with another series of all-time highs this week, even though it was relatively weak compared to the rest of the Mag 7. On the month-to-date basis, you can see NVIDIA is in the lead, Google is second place, and Amazon and Apple there. But the real picture comes into focus when you look at the Mag 7 year-to-date, and some people are already calling it the Mag or Fab 4 out of the Mag 7, but Google is slightly positive. But Apple and Tesla bringing up the rear so far, so they're not really impressing with their AI game, so to speak. So you can tell that they're at the bottom of the heap. But Google's showing some really promising, some surprising numbers, and proving to a lot of the naysayers that they are not out of the game, and they're not going to give up their search market share without a fight, and also playing for a seat at the AI table. So that's kind of the week, month, and quarter and year to date in review. Let's take a look at the charts. We had another all-time high on Friday. So just to refresh your memory, we got the daily, the weekly, and what should be the monthly there. There we go. And you can see all solid uptrends. This market is just relentless, and you can almost feel like there's people that are dying to get in the market. They just can't, but it keeps going up day after day. Nothing seems to derail it. Any pre-market weakness is bought up. You can see that MACD tried to cross below, but now wants to cross back up again. We are in above 70 RSI, so we are overheated. We do need a break. And if you look at the weekly, I mean, just you couldn't ask for a more beautiful candle on the weekly. And MACD is solidly positive. And on a weekly basis, we're at just 66, call it, on the RSI. It's not quite overbought yet. On a monthly, another beautiful monthly candle forming for July. This candle closes on Thursday. And look at that, the MACD or the RSI on the monthly getting into overbought the 70 level on the RSI. So, you know, you can't keep a good market down, but I do think there are signs that we should be backing off a little bit, if not giving this market a little bit of a rest. Maybe we correct through time rather than price. We shall see, but we are coming up on a more seasonally, I don't want to say negative, but less positive part of the year. And I'll show you a couple of pieces of evidence that we might be getting ready for some type of correction or pullback. I'm showing the NDX here again. Another all-time high here. You can see here that although the SPY or the SPX made it beyond the expected move of last week, and last week's expected move was about 60 points, and we did exceed it, but not quite on the expected move for last week for the NDX. We got up there, but never really quite hit the 395 level on the NDX. MACD solidly positive. MACD here on the daily, by the way, is somewhat sideways, but nothing worrisome. But look at that RSI on the daily. It is absolutely on fire at the 71 level, similar to the SPX 66 level on the weekly, and overbought definitely on the monthly basis. So you can see here a nice solid 4-month rally without any pauses at all. So NDX looking strong. And then finally, I like to look at the RUT after a rotten day on Thursday for the small caps, and a turn down early. We did kind of bounce right back off. And what really is the options implied expected move down here. And you can see on the weekly another doji candle, so to speak, after I mean, this makes it 3 in a row, so to speak, but seems to have a bit of an upward bias. MACD is positive, and we are not overbought on a weekly basis. This is obviously the weakest of the 3. Just can't seem to get the small caps to pull their weight and catch up with the SPX or the NDX. But nothing to complain about here. It was an up week for a slight up week for the small caps. And the MACD is really trying to turn positive here with the MACD at the middle level for the RUT. Taking a look at the VIX, here we are. I'm not going to call this a 52-week low because we come back here. If we look at 7/15 of 2024, that week, we were down to 10.62. And one of the divergences and one of the things that I mentioned that is a little bit of a data point pointing to a little bit of a divergence. We are at all-time highs, and if we're at all-time highs, why aren't we below or at this 10 level? So that's just one data point. It's not a big deal. If we go back to December, we've got as low as 12.7 on the VIX. We're still above 15. So we have room to go down here. Nothing says we can't. MACD is solidly negative on the VIX on the weekly. And it looked like it wanted to turn up on the daily, but here it is. MACD is turning down. But we are approaching oversold on the daily. Oversold level being the 30 RSI level. And you can see here 43 on the weekly. So, you know, it doesn't mean a whole lot to look at the monthly chart. But if we take a look at the MACD or the VIX pricing, which we saw in the webinar on Friday, let's call it a 15. And as I always like to do is compare what the out of the money monthly calls are compared to the puts. And I can see here that at 15, we go $1 out of the money. These are pricing in at about $2.32 for the calls mid-price. But if we go $1 out of the money on the put side, then they're pricing in at about, call it 9 cents. So we can tell that this is a big difference between the pricing of the puts and the calls. And given what we have coming up on the economic calendar and on the earnings, we can see that somebody's preparing for a whole bunch of volatility, at least over the next 23 days. And we kind of took advantage of this low VIX on Friday maybe a little early in the day, but we bought the 20 calls right here for about $1.04, $1.05, and they essentially closed at $1 on Friday. So we've got 23 days of protection. If we're going to get a downturn, it's going to be in the next 23 days. And we'll see if that helps us. I'll talk about that a little bit more. But the VIX pricing pointing to a little bit of a divergence in favor of the bears. So we'll see if that condition matters. Taking a look at the expected move for the week. Again, last week it was about 62 points. And we're going to look at August 1st. And we looked at this on Thursday, which was kind of early, and we were looking at about 100 points. So it kind of simmered down on Friday, and just about a smidge under 90 points is expected for next week, plus or minus 89 points. And this week was evidence. We closed about 16 points above the options implied expected move for last week. So if you sold options on a weekly basis, short-term options, then you might have lost money on them. And I reiterate, 89 points for a week where we have an FOMC meeting, non-farm payrolls, and a bunch of the Mag 7 earnings, 89 points. We could see that in a day. So you want to be a buyer of short-term options, not long-term. Not that I'm suggesting that you buy short-term options, but I think that I will take the over on this one for next week. And speaking of next week, here's the economic calendar that we have. Monday, nothing really happening. Tuesday, we have the JOLTS job openings report, or the kind of the take this job and shove it indicator, which is at 10 a.m. But Wednesday, we have the ADP non-farm, kind of a preview of non-farm payroll, but it hasn't really been predictive at all for the last, I don't know how many years. I don't know why anybody cares about it, but you think they run payrolls and they know better. And maybe they do, but advanced GDP quarter over quarter, Fed funds rate, FOMC on Wednesday, little announcement, and of course the press conference. But so I would guess that Powell would have seen what the core PCE looks like sometime during this meeting before it's published. But we get to see it on Thursday. Could be market moving and unemployment claims as we do every Thursday. But Friday, really strange to me that they do this on the first trading day of the year, of the month. We have non-farm payrolls for July coming out, and how they get any accurate information is beyond my pay grade, but there you have it. Coming up this week, we get into the heart of earnings, and you can see a lot of names on this that you'll recognize. Waste Management after close on Monday, Nucor, and we've got Visa Tuesday after the close, Starbucks, Marathon, Cheesecake Factory if you're hungry, UPS before the market, PayPal. I don't have to count through all these, but really the ones that people care about are stocks like Meta and Microsoft and Robinhood after the close on Wednesday. And we also have Ford and ARM Holdings, and then CVS before the open on Thursday. And after the close on Thursday, we have Amazon and Coinbase reporting, Reddit and Roku. So Friday, typically we have Exxon and Chevron both reporting before the open, Regeneron and Fluor. So lots of big earnings, one of the biggest weeks until next week when we'll see Apple's earnings as part of the Mag 7. So that's what we got coming up on the week. So it should be a fun, volatility-packed week, and combine that with low volume and anything goes. So let's take a look at what we've got in terms of trades. Let's see if I can put this up here and get you out of here as quickly as we can. Why is this sorting? There we go. We want to do this in alphabetical order. And bring up the chart. And there we go. So we have a call on Apple, and let's see what we have. Earnings are due on July 31st. I've got to believe that that's been pushed back because I didn't see that, but let's take a look. I don't see that on the calendar. So we have August 15th. All right. So August 1st. Did I miss that on earnings? Let's take a little look. August 31st. Yeah, Apple is right there. I guess even a blind man would have seen that one. Sorry about that. Yeah, so that's what my guess was, but I just all I saw was the Apple and didn't sync up. Anyway, we will have Apple earnings this week, so we'll have to figure out what to do with this. We quite haven't gotten kind of the bump that we've wanted out of Apple so far. You know, you can tell here that we had a week basically going nowhere. We were up on Monday, sideways the rest of the week. So we are up about 10% on this, but nothing to give us at least a first profit target on our August 15th, 210, 225 call spread. And we'll have to make a decision on this and probably likely close this ahead of earnings, win, lose, or draw. So Apple, not hinting or tilting his hand either way towards what it wants to do. Last week, the price was kind of pinned to 210. This week, it was pinned close to 215. We'll see what happens this week. On the other hand, we have AMD, which is not reporting until not this week, but the next week. But 3 beautiful days on this, and we have another. We rolled out our 240, our 140 calls to the 160s, and we probably should have taken our profit targets because it looked like we closed at 1296. Let's take a look at what these AMDs were pricing out at on Friday. Come on. 1210. Yeah, so we did get our first profit target on these rolled options. So I'll have to update that and put in a new profit target. But AMD really doing well for us, and probably more in the tank, although we'll probably see some type of pullback this week. So hope you're in this one. And we've taken 1, 2, 3, 4, 5, now 6 profit targets, probably be down to runners after Friday. So, and look at that. This red line is the options implied expected move. It exceeded it, but you can see it's pretty hot on the RSI, at least on a daily basis. If we look at a weekly, it's probably not as hot, but you know, that's a nice uptrend, and our timing was pretty good on this. We paid basically $8 for the original options, and now we've rolled them out to the 160s. So nice trade for us. All right, so let me switch back to the daily chart. And after kind of disappointing us for a couple of days, Baxter went up about 3 days in a row. We took our first profit target, and I was tempted to take another profit target on Friday. We didn't quite get to our next one, but we do have January combo here. We bought the $25 call, and no, it was the 30 call that we bought, and we sold the 25 put. So Baxter looking pretty good. I gotta imagine that earnings might be coming up sometime soon. Yeah, that's on Thursday, so we're gonna have to keep an eye on this one and probably close this out ahead of earnings. We'll see how things look, but decision will have to be made for Baxter earnings. Costco, not looking so hot. If you look at this, been in kind of a downtrend here. So even though retail stocks, the stocks of retailers, I should say, have been looking good, this one hitting the options implied expected move and bouncing off of it just a little bit. We've got this rolled out to the 925, 900 put spread in August, and we're down a mere 1.31%. But not terribly worried about it. We're $10 out of the money, so we've got some room left to go. Though we've got to see some strength. And quite honestly, Costco had a terrific run, and it was time for it to come in a bit. And if we can get, if we do get further down, this might be lining up for a nice longer term trade on Costco. But for now, all we have are red candles and nothing to say we're going to get anything other than a short-term bounce. But so far so good. We're out of the money, but monitoring this one for any further adjustments that we might need. CrowdStrike had a couple of bad days, but nice bounce back on Friday, up $5.89. By the way, we figured out internally that this P&L calculator, which is kind of like the current here and now, is not working properly. And we have the developers on this figuring out how the calculation should differ based on different types of trades. But this is not accurate at all. And it should not be more than 100% when we're talking about a put sale or a put vertical sale where we're collecting premium. But in any case, we sold this for $3.05. It's now pricing out at $2.38. So we're up on this. We already took one profit target. So CrowdStrike looking good, not worried about it. CVX, we've taken one profit target, and here's another one that has earnings on Friday, so we're going to have to make an adjustment. And since this is an August call spread, we will be taking this off. I'm not keen on taking a call spread that has really short dated into earnings. You can. I won't be, just because there's not enough time, and volatility collapse, even though this is a spread, will affect the pricing of this. And if Chevron comes down, whatever volatility is built into those options is gonna not be in our favor. So hopefully we can get another profit target out of this. In any case, what I would say at this point, I would not let this go beyond break even at all. So we paid $3.67. Win, lose, or draw this week, you should not let it get below $3.67. So I'm going to set that stop there, and you should too. Disney, just can't seem to get into gear. We're just really going sideways. And although we have a September 115, 130 call spread, and we've collected one, it just hasn't gone anywhere. So we're at $7.63. We're trying to get to our next profit target, but here it is, just going sideways. MACD is not helping. We have RSI that's middling. So when do we have earnings for Disney? That should be coming up 8/6. So it's not this week, but it will be a week from Thursday. So we're gonna have to figure out something with this, since these are September call spreads, but I don't want to take those into earnings, especially since we don't have that much of a profit in here, and I wouldn't expect it to do a whole lot before earnings. I have been surprised, but it's been a year of going nowhere in Disney. If we take a look at a monthly chart, I mean, here we are, and this is where we were in March of 2024. We're back to where we are. So basically a year and 3 months of going nowhere. And maybe it's going to wait for earnings to break out, and hopefully they have some good things to say. But I do like the MACD on the monthly, looking good. RSI, not overbought. Let's take a look at the weekly on Disney. It's looking like it came down to pull back, wants to pull back up, but Don't like this topping tail on last week's candle, but still MACD is solid, not overbought on the weekly, but I think earnings are going to be controlling. And of course, we have an overbought market and an FOMC meeting, so who knows what will happen this week. But hopefully we can get one more profit target out of this before we close out of it ahead of earnings, because all likelihood that's what we'll be doing. PCG, a new trade from last week. Nice bottoming tail hammer here and a nice jump. We didn't quite get to the $1.15 that I put in out there as a price target, and maybe we'll get that on Monday, given that we were up on higher volume on Friday. MACD's trying to flip over, and there's no reason why this can't get to the 50-day here at 1546 and give us some more profits. We do have a September call, and it's nice that we are getting close to our profit target, first profit target, and then we'll take a double, $1.50 on the next profit target. So once you hit that first profit target, I would set your stop at break even and not let it go beyond that. It's just too many trades out there to do that. Now, Rigetti, this is on a weekly. Let me go back to the daily. Not a great week. So it started off crappy on a down day, came way down on Tuesday, and basically not a pretty week for Rigetti. And quite honestly, the quantum stocks didn't do very well except for QBTS. Let's see how QBTS did last week. So it was a little bit better, but still not great on a weekly basis. I had some calls in QBTS. Yeah, a little bit better than RGTI, and I have calls in RGTI. I have calls in IONQ. Maybe I'm a little bit over enthusiastic on these quantum computing stocks, but my positions are really small, so I don't really worry about it too much. So Rigetti, not a great candle, but this one ought to have earnings coming up at some point, 8/12. So we've got a couple of weeks before we have to worry about this one as far as earnings. This is a 15/24 call spread, so we have plenty of time on it, but we have yet to hit a first profit target. Now, SPY, we have, let me flip back to the daily chart. We have a put inflection spread. And what we did here is we bought the 620, 610 put spread, and we sold the October 515 put. So right now, what is this saying? We're down 1,500%. We put this on for a nickel. And if we go back to here, and this is what, August 15th? Yeah. So we're now under the 3-week period where I start to worry about theta decay, but I don't have to worry too much because A, this is a spread, and B, we do have a farther dated out of the money put that's financing it. So we're not exactly bleeding theta here. So let me see where the, yeah, I mean, we're way out of the money here. So the 620, let me just maximize this, make it easier to see the column. So if we sell the 620 and ignore the October put that we sold, so pricing out at 620, the 610 puts right about 97 cents. So, and this is a 21 delta. And believe me, if the market wants to sell off, that 21 delta can quickly become a 30 or 40 or even a 50 delta, depending on what type of volatility bump we get and how much the market comes down. And I'm not expecting a big move down, but at this point, we are 17 points out of the money, and I might think about rolling this farther out in time to see if I can get something for a small debit to make this more worthwhile and make it more of a hedge than it is right now. So that's on my radar to figure out whether we want to do something. But we do have, as of tomorrow, 18 days, so less than 3 weeks, and I start watching things when they get under 21 days in terms of net long premium. Which put did we sell on this one? So we sold October 515 put. So if we take a look at that, October, maximize this. So the 515 put is still pricing out at $1.68. It's a 4 delta, meaning it has a 96% chance at this moment of expiring worthless. So it's not anything to worry about, but at least we're not losing a lot of the premium because this particular put is kind of saving the bacon for the loss on the 620, 610 put spread that is more near dated. And as we've done in the past, we have closed out the near dated put spread and kept the short put on if we didn't get really any action on the long put spread, which so far we've not seen any action and no price target, no indication that this market was ready to pull back. The divergences that we saw when we put this on have not mattered, and divergences are a condition, not a sell signal or a buy signal. TLT, we've been holding on to this one, and now we're getting into the last 3 weeks of decay. So we have the 85 short put, and so we're at or near the money here. It's a 30 delta. So if we want to, we can roll this again. I think if we look at the chart, it was looking better last week. So I think there's a possibility, and obviously with the FOMC in the mix, you just never know what might happen with the bonds. But if we get some good news from the PCE, there's a 97% chance they're not going to change rates, which means that there's not going to be a rate change for July. The next possible one wouldn't be until September, and that one's only around a 50-50 shot right now in terms of a rate decrease. August has the Jackson Hole meeting, so there is no official FOMC meeting, though we can hear stuff from the Jackson Hole meeting that could cause some volatility and cause some reaction in interest rates and in the bonds. So TLT, we're finally positive on this, and I'll keep an eye on this one. We have entered the faster decay period, although if we look at the options on the TLT, IV percentile is right there. I mean, 20% I would consider high, so we're at 19%. I look at the IV percentile, so anything at time we have 20% or more, I consider that good candidates for put sales. And so if I look out to September, if I'm going to roll this, I could go out to the 84s or the 85s straight roll and collect $1.34, but I'm not going to do that just yet. We're going to hold these through FOMC. It's not like these expire on Friday or anything. And then finally, as I mentioned earlier, we put on VIX calls kind of as an additional hedge. This one's if last year we saw VIX get up to 65 in the pre-market. I'm not saying that's going to happen here, but with low volume trading, a lot of the divergences that we're seeing, $1.04 for some protection is a cheap price. And you can handle this or manage it the way you see fit. Maybe if you get down to like 50 cents, you close off half or close them and call it a day. But my guess is that at some point we're going to get a chance to take some profits on these in the next, they expire in 23 days. So we have a little bit over 3 weeks because these VIX options stop trading on a Tuesday at 4 o'clock. And then they officially expire on the Wednesday morning. So that's about 23 days to these expire. But but we're down about 5%. But if you have them, they're a good hedge. If you don't, and you want to still buy some, I can see doing that. I might add a few to my position. This is something where I buy a handful of them and see what happens. And again, you could put a 50% stop, or you can see what happens. I think we'll get a chance to make some money on these, and maybe just a little, which is better than losing a lot. Anyway, done babbling here. Bottom line is, for this coming week, lots of news, lots of earnings coming out. We do have signs. We have some momentum divergences. We have some valuations that are a bit stretched, and we do have some big earnings with Amazon and Apple reporting, as well as Meta. And so we could see a lot of volatility. We have PCE, we have non-farm payrolls, we have FOMC. What more do you want for volatility in a week? We have an expected move of 89 points in the SPX. My guess is going to be a lot more than that, and we could see 89 points in one day, but who knows? All right, so with low volume, be careful this week. Keep an eye on your profits, take the stops as they hit, and I hope you have a great trading week, and I will see you again on the video for the live webinar on Thursday. Hope you'll join us, and tell your friends about Option Market Mentor, okay? Have a great rest of your Sunday, and thanks for watching, folks. Talk to you soon. Bye-bye.